Laurie Ellison from Hudson Valley Bookkeeping, and in this video I'm going to teach you a simple way to post a closing when you have sold a property. All right, let's get started. Hi everybody. Okay, in this video we're going to do the opposite and we're going to be the seller. So in my previous video I posted and I showed you how to post a closing as a buyer. Now we're going to take the same property and we're going to pretend we're the seller. So if you're on the seller side, this is your column. So just make sure you always, and sometimes it'll say instead of buyer, it might say borrower. So it depends on the statement. So in this case, we're selling it for 1.2 million. We're paying a broker commission. We are paying an attorney. We're paying transfer taxes. We're giving, I think, a credit to the buyer for some unpaid property taxes, and we're paying off our mortgage. And at the end, what's due to us in cash is the $712,250. So there's a couple things you should true up and make sure you have set up before you go about doing this, because I'm going to show you how to simply post it as a deposit. I came up with this way while doing a training session, and I think maybe long ago when I used to post closings for a home builder, this is how I did it because their software was so difficult and you only had like one shot to post. Okay, so just remember these things. So the first thing you have to do is remember that you have to have a mortgage of $375,000. So get your mortgage, or you could do it later, but it would be better if you got your mortgage to the 375 point. So reconcile your mortgage and have it where, you know, your payoff is set up on your balance sheet to match that. And I'll show you what I'm talking about. Now, the commissions and the transfer taxes and all of these fees, I'm not going to expense them. I'm just going to put them against the sale price because they're part of this sale. Like, it is reducing actually what you're really selling it for, right? Like, what is your true capital gain after you've done these things? So these are all just they're coming off kind of the top of this sale price of 1.2 million. Here's one other thing that we're going to have to deal with before we start is that there's a seller held deposit. Okay, so let's talk about if you've taken a deposit and it's actually been given to you. If it's held by the attorney, you wouldn't need this, but I have seen this where you have a seller held deposit because it could be like a non-refundable deposit. And if the buyer backs out, the seller gets to keep the money. So in this case, in this closing statement, there's $25,000 that's saying has already been paid toward the 1.2 million. So what I did for that, and I talk in a lot of other videos about the fact that I use like an exchange account. Now, let's just talk about exchanges for a minute. Exchanges are used by bookkeepers and accountants for things where they're kind of funneling in and out. Maybe the money comes in one day and is out the next day, and there is no real income or expense. Maybe the money is accidental, like it was deposited into the wrong account, so then it left. And sometimes the other issue that happens with closings is that money is happening on various days, maybe not even in the correct month. And you can't split up 25,000 into building land income, right? So a lot of times we'll have one main entry that will post a closing, but there could be these peripheral pieces to your closing that happen outside, and then they screw up your ability to do one journal entry in one day. So for various transactions that happen outside of that, that's why we use a closing. So I'm going to show you for instance, on this. So what I did was I made under 200 railroad, which is what we're selling. And the seller gave a $25,000 deposit. That happened at our bank account, right? So then it's like, well, what are you going to do? Like, how are you going to post that? So I made an exchange and subbed it inside of this property because I'm basically trying to, if I'm closing this property out, I will need all negatives to wipe this off the balance sheet. So Let's look at your balance sheet. You need to get really comfortable with your balance sheets. So right now, our basis when we bought the property back in 2015 was for 750,000, right? I don't even have depreciation on this one. I don't care. We're just trying to post the closing, right? But here you go. So now we've received 25,000. So now we're down to 725. Okay. So let's talk about the other thing we're going to need is we're going to need a sale price or a sale to do the ups and downs of all the selling of this property to show its difference, right? And this, I'll show you how this clears out in a little bit. So let's do a sale. Because again, you need to make things very easy for the your accountant to follow. So you have to have all this ready. I really think you should have this ready before you start to post this. Okay, so let's go look at our closing statement again. So I'm going to teach you how to do this as if you had a bank feed transaction, which I can't put in there because it's a demo file, but I'm going to post this as a deposit that I have a deposit of 712,250. Now you can't post this as your sale because you really sold it for 1.2 million, right? You're just only getting 712,000 because you have to pay off a loan, you have to pay the commission to the brokers, you have to pay some transfer fees. There's a credit for the seller, for the buyer. So you have all of these other things. Now, the only thing I would say we will expense though is the property taxes both ways. Okay, so let's make our deposit. So you would probably find this in your bank feed window, but don't be against posting things manually. Okay, so when you get to your bank feed, it's going to just say 712,250. But we have to get to that number, right? So now we're going to resplit this whole thing. Okay, here we go. So I'm going to post it to the sale of 200. Now it's really not going to be that because there's all these other, but we should book it so that your accountant can see. We're going to start, we always show all our work with math. Okay, so now we're going to follow along. So our sale price is 1.2 million. The seller held deposit, we had that in a closing exchange. So we're going to take that, that's coming off of the money owed to us. So I'm going to do a negative. I have to pay a broker commission. That's going to go on the sale price. Here you're going to say broker commission because you're trying to figure out your capital gain on this sale. So again, it's going to be a negative. It's coming out of my proceeds. What did I call this? I just want to make sure. Sale of. Okay. Remember, when you bought these, all of these fees went into your purchase, into your basis, all your attorney's fees, all of, anything you paid. Transfer taxes. That's another. And you should put all your memos in here just in case. I've seen, it depends on your CPA. Some like to just mess with stuff, I swear, just to justify their fee. But let them. Prorated taxes to buyer. That's going to be property taxes. This repair credit is just basically you're giving 5,000 off your purchase price. It's just theoretical. Mortgage payoff. I have a 200 railroad mortgage. Loan right here. That's the wrong number. That was the, just ignore that part. So see how all this money is coming out of your 1.2? It's so sad. And look, that's as easy as it is. 712,250. That's how much you get. So if you put your sale price in, then take away money they already paid you, take away your commissions, take away attorneys, transfer taxes, other credits to the buyer. This is the one thing I would expense. Anything with property taxes. This is off the sale price. And then you had to pay off your mortgage. Okay, so that's done. Now let's look at the last step. So that's super easy. Now the closing exchange, that piece with the security deposit, that 25 is going to no longer be on your balance sheet. But the issue is we're going to look at this balance sheet and your property is going to be negative because you sold it for more than you purchased it for. And I don't have the depreciation in here and I'm not going to bother. Okay, so here we had building and land. And then in the end, our real sale price was 1.116200. And that's because we took out, we had all of those fees and transfer costs and so forth. Okay, so remember that the 1.2 then had those other fees taken out. Okay. All right, so this is now if you had accumulated depreciation, you would then even, it would be much higher your profit, right? I did not put this in this demo file, but so now what you have to do is close this out. So you have your sale, but then it needs to go into an income to be closed. So we said it was sold, right? So let's just make one more code. Let me see what I would call this. So here we need this, right? So look how our closing exchange went to 0. And now we have the sale, but now we need to clear this out. But I still want this to be shown as part of your number so that you can see like what it really was. You know, you always want everything to be following and that you can someone can understand and like go into your journal entries and see why you say you really made 1.1 million. Okay. So our number is 366,200. So I made that capital gain. Okay, so now we're going to post the capital gain and post the credit and wipe out the 366,200. And I created a code. It's like sale of 200 Railroad Avenue as other income because we want that separated from our regular rental income. It's not a normal day-to-day thing. So it needs to be, again, you've got to make things really easy for your accountant to find them. I keep talking to people that say that like things have been missed and properties are not on their books or certain things are missing from your tax return. So please don't just let your accountant file a tax return without checking it. So this is what this is showing. And I really think this is beautiful. I like this stuff way too much. So let's follow along what happened here. You were into the property for $750. If I had accumulated depreciation, you could be down to $600, but I didn't put that in. It's just demo. So you can figure that out. All right. Then what we did was we posted the sale, right? And that made us have a negative 366. So you can't have a negative asset. That's completely impossible, right? So that was the amount of the profit that you made on this sale. So what you want to do though, is you want to show the accountant where you got to these different numbers, right? So this journal posted everything that went against those capital gains, right? So when you paid those commissions and transfer tax and so forth, that reduced the sale price. So then this created, here you have this negative 366,000. So after that is what we then have to zero out. But don't net it and don't throw it in a different line item. You want everybody to be able to say, okay, I see 750. Okay, I see, and then they're going to say, wait, I see on here it says 1.2 million, right? Like now we explain why we are at 1,116,200. Okay, so again though, someone's going to say, okay, why? Your closing statement says 1.2 million. How do you have 1,116,200? So right here, you should have that figured out in your brain, make sure it all makes sense. These are all expenses you had to, when you bought a property, you would have to build into your basis, right? You wouldn't pay commissions back then, but any closing costs and anything that it cost to acquire the property, you had to build into your basis. So now you get to take it off the basis when you're selling. So these are the things that went against the sale price. You had to pay the $72,000 in commission, attorney's fees, transfer taxes, and a repair credit is just straight off the sale price. It's like when you go to Macy's and they give you a $10 coupon on a $100 pair of pants, they really agreed to sell it to you for $90. Make sense? Okay. So that is, and this is something I would attach, right? So just do this. You could just download this, and then right here in your journal entry, if anyone ever came back and asked you, what I would do, download that as a do it as Excel. So then what you're going to do in your journal, which is your deposit, because we did it a simple way, is you go right here and you can add your attachments. I'm going to go to my downloads. That's my basis. Here's my YouTube's closing statement. And this is great. This is what you really want to do, because as if your accountant is looking at this and trying to make sure they agree with how you did it, they will be able to see the paperwork right here. The other thing I would recommend, okay, wait, I have one more thing. I got lots of recommendations. When you sell that puppy, you change it to sold. Okay, so here we had it when we purchased it. Now we're going to go change that. So it's like, hello, accountant, please pay attention to what I did. Sold for $625. So see how it says that right there? Sold, and it has 0. Now, if the accountant's any good too, they would be running a balance sheet from the prior year to this year, and they should see that it went down to 0. So like I didn't have this on the books the prior year, but this is what you need to see how that says sold everywhere. So like it should be like, hello, bells and whistles, this has been sold. But I kid you not, I work with so many different people with QuickBooks coaching and things with real estate that people are taking over their books. They're like gaining control. And either from their bookkeeper or their CPA, and they find out that there are properties on their books that they sold 10 years ago, that some properties they bought aren't even on their books. So you really, really, no matter what, need to get so familiar with your balance sheet that you can read this and know, what is going on. And hopefully you don't keep it, hopefully you're only have one or two properties in each of your, LLCs. That's the way I'm used to seeing it here in New York. Okay, so I want to show you another thing. We posted that capital gains and then I got distracted. This is here it is, other income, sale of 200 Railroad, and here it is, because it's not part of your regular rental income, uh, business. So it needs to be down in this section so that we can notate that it's like it sticks out again to the CPA. Now, one other thing I would do, this is just a little tip. If you're buying and selling or you have a lot going on in a year, right? And this is actually really good for you to keep and maybe just tab it out, right? I really love Google Sheets because it doesn't matter where I'm at. But let me just move this YouTube thing out of the way. I think you should make this for your accountant because honestly, they just don't have that much time and they are not going to remember all the things that you do, and you don't remember either. So I say this a lot. You guys are like crack addicts and you love to buy these properties, but seriously, it's like you start with a couple and you always remembered everything, and now you can't even keep track of when you bought what and sold what and what happened. So what you really should do is create like a little digest and keep this year over year, where you would send your accountant a transactional history. So like you could say on here, on 4/6/25, sold 200 Railroad, right? And even here, you could put in the sale price, right? So I used to do this when I worked for a home builder because they would have so many different sales of homes each year, and we had to figure out like how much was into it. So the sale price is 1, 2, right? And then here, though, you could say what you calculated, and then, the capital gain was, I think it was 366, 200. Okay. You could have a loss, and then you could put capital gain loss, right? So I would make a cheat sheet and I would keep this for yourself and just keep adding this tab every year, because if like, let's say you bought another one, let's say you did a 1031 exchange. If you put all of this in a simple spreadsheet for them to track, this is what I did with my home builder. I would always make a list of how many homes were sold, what was their sale price, on and on, so that when the CPA was looking at things, it wasn't like, you don't want to send your CPA on a scavenger hunt. Do you really want to pay them, $400 to $1,000 an hour to try and figure out what the heck you did? I don't think so. I think what you should do is, put this in a nice, neat little tidy package so that they can easily create your tax return, because that's their main interest, is creating your tax return. So, and they don't want to fix your books. They don't like QuickBooks Online. So you really need to have this buttoned up and ready for them before they go about doing the tax return, because they are making you sign something as well. It says that they are not auditing your books and they are using what you give them. So that's my little rant about that. So I hope this is helpful. Please post any comments if you would like me to make any other specific videos. All right, have a great day.